And you're going into full screen, right?
I am going into full screen.
Okay.
All right, so bear with me a minute. I want to give it a second. All right.
Just a couple of veterans talking about VA home loans.
Oh, yeah. A couple of veterans talking about VA. There could be a delay. I don't know. Oh, yeah, here we go. It's coming up. So there must be a delay. Anyway, so here we are. Crazy day. Keith Turgeon, Kevin Shangra. Hey, Kevin, how are you?
Very good, Keith. How are you?
Good. So you had a screw up with the kids. Talk to me about that.
The kids were over at my mom's, and just the whole day kind of went fly. We had a couple of new things about the NAR settlement and having to disclose. If you want to hear about that real quick.
Yeah, let's talk about that real fast. So
All right,
and what's changing?
So the NAR, so if we as lenders, if we don't disclose fees properly, we basically eat them. That's the short of it. If I disclose, let's say I disclose that your appraisal is $100 on your refinance that you're going to do with me, Keith, and the appraisal comes in $800, we eat the $700 difference. So we have to be very accurate in our fees. And what's happening now is the NAR decision,
which stands for
National Association of Realtors.
Okay.
They made the decision, which is now in effect, that the sellers do not have to pay for the buyer's agent representation. Where generally, if you recall, and this is almost standard across the industry for the past forever, that let's say it's a 4% seller commission, 2% goes towards the buyer, 2% goes towards the seller's agent. I know their brokerage takes a piece of that, but the point is the seller was in effect paying both the buyer and the seller's agent. Well, what happens now, Keith, is that if we don't properly disclose, if I disclose without reading the contract, and let's say the buyer is paying out of pocket their real estate agent's commission, I better put that on my disclosures, because if I don't, Loan Depot eats 12, 14, 18 grand, whatever it is.
Wow.
Huge. So really what it means is that I really shouldn't not disclose without seeing the contract, which I generally don't anyways, because until there's a contract, why would you disclose? Unless you're doing a pre-approval where you're trying to get a loan commitment without an address, which is a TBD, but that's another situation. But yeah, so really I have to be very careful. We lenders have to be very careful to make sure that they understand the contract, like who is paying who. And if the buyer is paying the real estate commission, that needs to be disclosed on the loan, because that is a cost to purchase the house. You never had to before because the seller was paying it. It's not the buyer's responsibility. So anyways.
Got it.
Yep.
All right. Well, good update.
It's always ever changing in the industry.
And I'm sure there's more to come.
Yeah.
But the purpose of what we're here to talk to each other about today is VA home loans. And I pulled this off of the Department of Veteran Affairs website just a few minutes ago.
Yep.
And basically the opening sentence on their webpage about VA home loans is that the Department of Veteran Affairs helps veterans, service members, and eligible surviving spouses become homeowners. And so that's what we're going to talk about today. For everybody, I'd like to formally introduce Kevin. We have to get some credentials out of the way. So Kevin is with Loan Depot, and tell us a little bit about what you do for Loan Depot and how long you've been there, and a little bit about what you like about Loan Depot.
Sure. So I am a mortgage loan consultant, mortgage originator, mortgage loan officer. We have a whole bunch of different hats, but basically it's the same thing. I originate home loans for people buying or refinancing, basically financing a home, a piece of real estate. Ben, I think I'm in my third year with Loan Depot. Love it. I started back in mortgages in 1998. A lot of the industry has changed after the Frank Dodd kind of change after the economic crisis back in 2008. Just a lot of more forms, more transparency. Some of it, I think, made it more complicated. Other things made it a little bit safer for the borrower, for the client. But Loan Depot is very tech savvy. They're very cutting edge. They use a lot of what's the word I'm looking for? They leverage technology to make the process much more streamlined. For example, if anybody's ever gone through a closing, if they bought a home or refinanced, there's, I don't know, 10,000 pieces of paper you have to sign. We can now e-sign 90% of that. So that streamlines the closing process. There's a lot of things I can digitally verify income and assets. And that's all the advent of the internet, and everyone does online banking now. I can't remember the last time I met someone that actually gets their bank statements mailed to them. I don't know. Do you? I don't.
Actually, I do. I'm old school.
Oh, well, there you go. There's the one right there. Yeah, but you know, a lot of you know, there's a big push for paperless. Every time I get anything, it's always a push for paperless. So,
how big is Loan Depot?
Nationwide, licensed in all 50 states. You know, each loan officer has to be licensed in the states that they do business in or originate loans in. But yeah, we're licensed. I think we have 700 loan officers. Okay. We are currently growing. They are taking the stance of we are going to get bigger, and they are trying to capture more market share. So I think the economic downturn that we're seeing with the higher interest rates, which we'll talk about, I'm sure, has caused a lot of mortgage companies to lay off and or close shop.
So within the scope of VA loans, among those 700 loan officers within Loan Depot, you actually have a kind of a special credential within the organization, don't you?
Yeah. So Loan Depot, this is a Loan Depot specific. So what they did is they created a veteran certified loan originator. So I went through the course. I found it fairly easy, but only because I'm a veteran myself. And so a lot of it was speaking veteran language. I know you're a veteran, Keith. We've talked about this many times, but I don't need to explain to you what an E4 is. You know what that means, the pay grade. And so for a lot of loan officers or a lot of lenders or loan originators out there that have never worked in the military space, there's a lot of things like, what's an LES? That's a leave and earning statement. That's basically a military pay stub. But if you don't know the vernacular, so the course was basically designed to help not only learn the VA home loan, which is unique in and of itself, but also just kind of the language and the vernacular that we use in the military.
So you know the difference between a retired E8 and a retired E9.
Correct. And some people that don't have any experience with the military may not even know what the difference between a lieutenant and a command sergeant major is. You know,
right? Or the difference between a captain in the Navy and a captain in the Army or the Marine Corps or the Air Force.
Correct. So it was a good course, but now what we do is we generate leads. You know, Loan Depot, no lie, everyone does this. All the big companies do is they purchase leads from when people get on a lending tree or they Google home loans and they check out things. Those companies, those aggregators are selling those leads to people like Loan Depot, Rocket, and we do now a skills-based routing. So when people are inquiring about VA home loans in New Hampshire, Maine, Vermont, Massachusetts, they will likely be sent to me or someone in these states that is a VA certified. So you want to make sure that the lead that is a VA specific lead goes to a VA specific lender or loan officer. Yeah, so it's helpful.
Got it. So what I wanted to do is just kind of go over a couple of things for the audience on what we're going to talk about today. And I know you're very well versed on this, so I'm going to really be listening and taking some notes. But we're going to be talking about VA loans. Who are they for? And we're going to talk about the benefits and the disadvantages. So with that said, Kevin, maybe you could jump in and talk a little bit about who the VA loan program is suited for.
So it's arguably one of the best loan programs out there. Basically, it's known as the no down payment program. So it is an awesome program where if we could agree that over the last 4 years, property prices have increased exponentially, correct?
Correct.
5% on a $350,000 loan 4 year or $350,000 house 4 years ago is now 5% on a $700,000 loan. And so with the VA, there's actually no loan limit. If you are a first-time user of your VA home loan, you could buy $1.5 million house with zero down payment. That's huge. I mean, I think arguably one of the biggest barriers to entry to home ownership, in my opinion, right now, is the cost to close. I have friends that are still house hunting. They're paying $3,500 in rent, and that's probably what their mortgage will be. But the biggest barrier to entry is that, you need $75,000 at the time you close. So the VA, one of the huge benefits is the zero down payment. And so when you say your benefits of no private mortgage insurance, that is absolutely 100% true. Your disadvantages of number one being a VA funding fee. So to explain to all the listeners here, the VA does something interesting where they do what's called a VA funding fee. And so everybody that uses the VA home loan that does not have a disability rating of 10% or higher will pay what's called a VA funding fee. What the VA funding fee does is it's a fee that's collected by the VA. It's 2.15% for first-time use of a purchase of a home. That 2.15% goes to the VA, and the VA has this huge pool of money. And in the event that a veteran cannot pay the mortgage and ends up subsequently being foreclosed on, the lender that has that loan, if there's any loss, the VA will pay that loss. So the VA is guaranteeing the loan, right? So that's what mortgage insurance does, is mortgage insurance guarantees that if there's any loss, the mortgage insurance company will pay the lender. The VA is saying, hey, we're going to pay off the lender any loss because we support our veterans. And so
let me jump in real quick. We've got some, 26, 28-year-olds who did 4 or 5 years. They're out. They did their time. They've never owned a home before. This might be the first time they're hearing some of these terms. Can you just maybe with some rough numbers for people who haven't bought a home yet, or some of our young veterans who might be listening, what's the total down payment look like nowadays on a $400,000 home if you can find one?
So if you're on conventional, you're probably 5%, and so you're talking 20 grand, just the down payment.
Okay.
And then on top of that, you're probably talking another $8,000 in closing costs. And in this area with the tax rates that we have, probably another $8,000 in escrows, which is you're setting up your escrow account to pay your future taxes and insurance.
Mm-hmm.
Because we're in a high tax area in the country.
Right.
So, you're talking what's that, $40,000. And the VA you could get in with, basically 10 grand, 12 grand.
So in the VA situation, you said about $20,000 in down payment, about $8,000 in miscellaneous closing costs, and about $8,000 put in escrow for tax purposes, real estate tax purposes. With the VA loan program, it sounds to me, correct me if I'm wrong, but the $20,000 goes away, but we
Correct.
Still have $8,000 in closing and $8,000 in escrow. Is that about right?
Yes. In this market, yes. And generally, Keith, if we weren't in such a seller's market right now, you could get a seller, in a more normalized market, you may be able to get a seller's concession. And so you could say, I want to buy your $400,000 house. Right now you really can't under offer. You can't lowball because you're not even in the game. But let's say the market was more normal, where we had a more normalized level of supply. You could maybe get a 3% seller concession, which could be $12,000 towards your fees. And so you might get in for $2,000 or $4,000 at the most with no down payment.
And that's an important note, because I just want to touch on something here that, because you guys are nationwide, you actually have access to folks like yourself throughout the country who work for Loan Depot. And we might have some veterans that are New Hampshire based. Maybe they're thinking about moving back here, but maybe they're thinking about moving to Florida or Texas, where we're starting to see some real estate trends from a pricing perspective.
Those two states specifically, yeah.
So now all of a sudden, to the point that you just made, if you're looking at a VA loan in some of those states where it's not necessarily a seller's market anymore. What now becomes the advantage for that veteran who says, hey, I might go buy in Florida or I might go in Texas, but I want to just understand how those numbers come out?
Well, I think there's a couple. You're hitting on a couple of things, and so if I was to put on my building wealth hat, if New England is kind of unique. There's pockets around the country, but as a region, New England is considered a high cost area. And we can consider New York in that as well, although
Right.
New York's not part of New England. But the Northeast is arguably one of the most expensive regions in the nation. Okay, so if I was to move, I could probably buy a house cash or very small mortgage down in the South where home prices are cheaper. But I would argue that to build wealth, I would absolutely rather leverage it, get a mortgage with a VA loan because I'm a veteran, and take my proceeds and invest it and have that build wealth while I'm still working, so that when I do retire, I have a very large nest egg, and then the interest or the dividends off of that may pay my mortgage.
Right.
And let's be honest, we're always going to refinance our rate lower as they come down. So that's just my little plug about how I think people build wealth through, because if I buy a house for $300,000 in South Carolina and I use the VA loan and I have no down payment and I get a $300,000 loan, it still will increase in value the same as if I bought it cash.
Mm-hmm. Right.
Right.
So why spend the cash when you can leverage somebody else's money, the government's money?
Correct. So if my house gains 5% a year, so that's what, $15,000 a year, right? And the $300,000 that I could buy that house cash, I gave it to our financial advisor friend, and he could return 7%. I'm now making 12% on my assets versus just 5%.
Right.
That's where I think, that's where I think the VA is arguably one of the best ways to build wealth, because you don't have to spend your cash as the down payment. And because there's no private mortgage insurance, there's no 20 there. It doesn't matter about that 20%. We know about our mortgage insurance is paid until you have 20% equity. There's no mortgage insurance on the VA home loan. So even if rates come down 1%, but you only have 14% equity, it's irrelevant. It doesn't matter because you don't.
So let me ask you. So on a $400,000 house, what would a PMI be about for a conventional non-VA mortgage?
All right. So you're saying purchase price of 400,000?
Purchase price of 400K, yeah.
All right. So if I buy a house for 400,000, I finance 95%. So I have 380,000. It's generally about 77 cents per thousand. So if we take that divided by 12, it's $243 a month, roughly. I'm plus or minus probably $20. And I know if you have a really high credit score, it does make that lower. So for all your listeners, that's just kind of painting with a really broad brush.
So thank you for that, because actually that $243,000 that you don't have to
$243, yes,
per month, that you don't have to pay in PMI, actually gives you more purchasing power, doesn't it?
Absolutely. Right. Because when I qualify anybody, regardless of the loan, it's called PITI, principal, interest, taxes, and insurance. Insurance being homeowners and mortgage insurance. So if you have $243 that's not included in your payment, that's $243 that can go towards principal. So, and this is what I kind of chuckle when I do interact with real estate agents and they say, geez, I see your pre-approval is for the VA home loan. Is there any way you could go conventional? And I say, honestly, he could probably go higher with the VA home loan than a conventional, because he or she can go higher because the PITI is going to be less on the same house with a veteran home.
We're gonna touch on. I want to follow up on that comment that you get from realtors quite often about VA mortgages versus conventional. So talk a little bit about the types of competitive rates that we're going to see on VA mortgages, and also touch on the refinancing of a VA home mortgage. I actually don't know anything about that and would love to hear what you got to say.
Rates are generally going to bounce around the same thing as other rates, they're never, the VA does not dictate. They don't set rates. They have nothing to do with the interest rate. They are solely the guarantor of that loan. The market and the people buying the mortgage-backed securities with government loans are the ones that are pricing the rate. It's generally going to be about the same. Some days VA is going to be lower than conventional. Some days FHA is going to be the lowest. Some day, there's all sorts. The thing about the VA that makes it attractive is that it is guaranteed by the federal government, right? And so it's not a company that the definition of zero risk is the federal government, right, with treasury bills. And so
Right.
it's a safe haven. So when you talk about, if you have a mortgage insurance company, we bailed out some, and AIG was bailed out in 2008. That's a mortgage insurance company. So the VA probably will not fail anytime soon, correct? I think we all agree with that. And so when a lender does a VA loan, it's arguably very safe. And so it's really just the cost of borrowing the money at that margin. So every company has their own margin. So anyways, the rates will be generally competitive. They're not higher or lower. They're in the same ballpark.
So before we go into the disadvantages, you started to touch on something relative to realtors and kind of their distaste, if you will, for a VA mortgage product being used for something that they have listed. Can you touch on what's going on there?
So government loans, so FHA and VA, right? Let's stick with the VA. The Veterans Administration's job is to protect the veteran. And so I take issue with anybody who says, I don't want to use a VA loan because they're sticklers on the property. I don't know what sticklers on the property means, but I take issue with any real estate agent who doesn't want to accept a VA home loan, because you're really doing a disservice to our veterans. For one, what you're telling me in that comment, Mr. or Mrs. Realtor, is that my property has issues and I want to try to sell this to somebody and get that around them. The VA is not, they are not doing anything out of the ordinary. They just want to make sure the home is safe, sanitary for the veteran, right? If a real estate agent has an issue with a VA pre-approval or VA offer, I wonder why, because the VA is not trying to be a stickler. They're just trying to be protective of the veteran. They're the one guaranteeing the loan. That's true, but they really, truly want to make sure that the veteran is taken care of. It's not good and politically speaking, it's not good PR if the Veterans Administration approves loans and veterans are moving into houses that are deemed unsanitary, unsafe. So the VA has a responsibility to make sure that they are helping their veteran and protect them. So that's my one take on it, and it's nothing out of the ordinary. Now, with that being said, the Veterans Administration is also very cognizant on understanding that veterans need homes, and it's a benefit that we've earned by serving in the military. So there are times when I have a person buying a condo, Keith, in a new condo development, and it is not Fannie Mae or Freddie Mac, the giant government-sponsored enterprises that back all mortgage, like 99% of mortgages in the country. There's certain requirements for new construction condos or condos in general that make it difficult to finance conventional. The VA, if the veteran says, hey, VA, I really want this condo, the VA will make exceptions. That does not happen conventional. So the VA understands too that they need to make sure that they help veterans get into homes. So it's an awesome program, but it has a level of old school, just a handshake taking care of people. If that makes sense. The rules are a little bit more bendable, gray for veterans. If the veteran actually makes the call to the VA and says, hey, I need an exception on this condo, most likely the Veterans Administration will say approved.
Really?
Yeah, and that won't happen on a conventional. Wow. It's black or white. It's Right. And because the Veteran Administration is really trying to help veterans, and there's just too many homeless veterans out there. There's too many veterans that have earned this benefit and want to use it. And the non-military market of home ownership is very strict. They're very much more risk averse. But again, because the VA is the federal government, we're already 35 trillion in debt. They can guarantee it. I mean, they have this pool of money from everyone's funding fees. Right. And so they're gonna, and so really it's all of us veterans helping all of us other veterans, right? You pay your funding fee, I pay my funding fee, right. And then so-and-so unfortunately gets into trouble, loses a job, gets foreclosed on. Our funding fees help guarantee that loan. So it's a tight community.
I seem to recall with our previous conversation when we were talking about the 203K.
Yep.
Is there a rehab component within the VA loan program? Talk about
so
that.
VA does a renovation loan as well. A little shout out to Loan Depot. We are the largest VA renovation lender in the nation.
Wow.
And in fact, we are so large that we actually helped create the VA renovation loan with the VA. So because I will say that one of the things that is pretty impressive about Loan Depot is the renovation department we have is pretty robust. I'm doing a nice renovation loan right now. I have a whole department of people that help me with a renovation because it's labor intensive, but the VA, the Veterans Administration, we actually approached. My understanding, I wasn't part of this, but my understanding is Loan Depot approached the VA and said, we can help you design, implement, and set up the policies for the VA home loan. So
talk about what the renovation part of the component is for the VA loan program and how it might be leveraged within this conversation for veterans looking maybe to purchase their first or second home.
So if you are it's really the same thing as the 203K loan that we did. The overarching loan is a VA loan, zero down payment. So if you find a house for $300,000 purchase price, but it needs $100,000 of work, and you're a veteran, you can get a $400,000 loan with no down payment, no skin in the game, except your closing costs because you're a qualified veteran, and you have $100,000 now set aside to renovate that property. I mean, that's the 30,000 foot view, just like the 203K.
Right. And so then something to think about is that if I find a home that might be 75% of what I want, and the other 25% might be like an extra small bedroom or something like that, we can leverage the VA loan program and the rehabilitation component of the VA loan program, so long the math works, right?
Absolutely. And I think there's a demand right now for there's a demand, I don't know the rest of the country, I don't travel, on a monthly basis, but I think there's a demand for renovation loans in the Northeast because we can only build them so fast and there's only so much land. But there are houses that were built in the 60s, 50s, 60s, and 70s, which may have only had one owner, and it. They live in it forever. As they've gotten older, the upkeep maybe slacks off a little bit. The updating slacks off. And so the house still has inherent value, but maybe just needs updating. And so we don't live in an area where we're not in a state like Arizona where it's easier just to start a new house because there's so much ample land. I mean, Keith, we just don't have,
right.
There's only so much buildable land up here in New England. Look at our town of Nottingham. There's only so many buildable lots in Nottingham. It might actually be more cost effective to find that house that was built 100 years ago. Great piece of land, just needs some renovating. I don't think you see that back in. There's not a lot of 1950s houses in the great Midwest. Maybe I'm wrong, but I don't know. I feel like we're the oldest part of our nation, right?
I would agree. So I just categorized disadvantages. I wouldn't know if that's the right term, but we spoke about the VA funding fee. Talk about
I'll go more into detail on that. And so,
excuse me,
the VA funding fee, right? You can use your VA loan more than once. you have an amount of guarantee that the VA will guarantee 25% of the loan amount. Okay. I'm sorry, 25% of the purchase price. Generally speaking, if you have I've used my VA home loan. So if I was to, I purchased a house for $300,000, I think, roughly. And so 25% of 300,000 is the amount of guarantee I've used. I still have some guarantee left. So I could probably go buy another $250,000 house. Probably hard pressed to find one out here, maybe a $300,000 house. So you can use your VA. You can actually have two VA loans at once, provided it's your primary residence. So let's say I moved to Mississippi. I couldn't sell my house for some ungodly reason up here. Maybe the market just tanked and I couldn't sell my house, but I had to move. And really this comes down to, let's say I was on active duty out of Fort Drum, New York. I owned a home. I got permanent change of station, PCS'd to Fort Polk, Louisiana. These base names has probably changed now. But if I had to move quickly and I didn't have a chance to sell my house, but I wanted to buy a new house, there's the likelihood that I could buy another VA home loan. And that makes sense because it is going to be my primary residence. I'm now stationed at Fort Polk, Louisiana. My house in New York eventually sells in Watertown. So, but that works for anybody, even in New Hampshire. If you're a retired veteran, you could have more than one VA home loan. You just have to occupy as your primary residence. The downside of the VA funding fee is it is a sunk cost. Okay. So if we said that it was $243 a month to put down 5% on that $400,000 home loan, if the market continues on the track that it does, and let's say miraculously in 2 years you have 20% equity on your conventional loan, and I refinance you and you now eliminate PMI, that means you paid $243 for 24 months. If I take that by 24, you paid $5,851 in PMI.
So that's an interesting twist. I hadn't really thought about that.
Right now,
I'm in a conventional loan. I refinance for a VA loan. Is that what you're suggesting?
Nope. What I'm saying is, follow my logic. You buy a $400,000 house, you finance $380,000, and you pay $243 a month. And it takes you 2 years for you to have 20% equity. You need to gain 15% more equity. So in 24 months, miraculously, your house, you now have 20% equity. You put down 5, it's gained another 15% with you paying down a little bit of principal and the market.
Right.
So then I refinance you, and you now no longer pay PMI.
Okay.
And so what you did was you paid about $5,800 in mortgage insurance payments. But if you don't have a disability rating of 10% or higher, you paid $8,600 in a VA funding fee. So what's cheaper, $5,200 or $8,600?
Right.
But the problem with that scenario is I don't know if it's going to be 2 years. It could be 4 years.
Right.
And so the only issue with the VA home loan is the VA funding fee is a sunk cost. Once you pay it, it's paid.
Right.
Right. Your monthly PMI, it may go away 12 months later. It may go. Let's say you make a $10,000 principal payment on because you have an inheritance. Let's say you got a $20,000 inheritance and you had a VA home loan, and you had no equity, right? But then you made this large monthly payment. Now you have 20% equity. It really is irrelevant. You already paid the VA funding fee.
Oh, I see. Okay.
Right. So you can't get it back as a sunk cost. That's why I always, if you're going to pay mortgage insurance, it's arguably better to pay it monthly because you're going to gain equity from just appreciation, as well as paying it down. But the VA takes that entire funding fee up front. You finance it in the loan, right?
Right. It's part of the closing costs.
It's part of the closing cost. I mean, well, it's not part of the closing because you actually finance it in. It's not part of the cash. So if you would actually have a loan amount based on $408,600 for a $400,000 house. Technically, a veteran that puts no money down, the day they move in the house, they're upside down.
Upside down, yeah.
So the disadvantage is that you're upside down in the house, but the advantage is you didn't have any down payment, which is a large obstacle or barrier to entry. And so if someone would talk to me about they wanted to buy a house and then flip it, they want to go VA and they don't have a disability rating, that's a hard pill to swallow.
Right.
Likelihood you're already starting 2.15% in the hole from your VA funding fee, first time use. It's 3.3% if it's your second time use with no
Okay.
So I would argue any veteran that has done any amount of time should seriously consider if there's anything wrong to try to get a disability rating.
And so there's a lot of nuances and a lot of details in this program. And so if anything that Kevin just said, you want to have a conversation about, you want to better understand, Kevin's not only available for you in New Hampshire or Maine. Where else are you licensed?
Vermont, Massachusetts, and sunny Florida, but that's only because of the snowbirds up here that want to buy down there.
So Kevin would happily, if you were going to buy a house in Oregon and you happen to catch this video and you need extra context on what the VA loan program will do and not do, feel free to reach out to Kevin via email. Have that conversation with you. And then once you're satisfied with the information he's given you, if you want to get started, he'll refer you over to one of his colleagues.
Yeah, absolutely. And that's a good point, Keith, is that I have colleagues. I don't know them personally, but I do have, we have Teams chats online throughout the day. And we have a VA one, we have an FHA one, we have a BNI one. We're in BNI together.
Right.
So I can find a BNI loan officer in my company in any state in the nation that's licensed in some state. So I've done that. People have gotten divorced and they're moving back to California. I find a colleague in California. I get on a call with them. I kind of get a good feeling. And then I say, hey, I just talked with them. They're top notch. They're good to go. So, yep.
All right, cool. Let's go over here. And so let's talk about what it's limited to certain types of properties. Kind of jump in on that and talk about that.
Well, it needs to be owner occupied. That's the biggest thing. They will do single wides. Has to be real estate. So that means it can't be,
so no mobile homes on a rented lot.
And it has to be on its own lot.
Yep. Mobile home on its own lot.
Yep.
Yes. Okay.
Yep.
And then what about multifamily?
Oh, you're quizzing me. I don't know that off the top of my head. Let me look it up. Sorry. Okay. I should know that, but I will say that I think you can. The biggest thing is that we're trying to help veterans get a home, right? And so if you are going to, it's not a money-making scheme, right? It's not a investment property scheme. Yep, 1 to 4 units. Yeah, I'm
really?
Sorry.
Okay, wow.
1 to 4 units. Minimum credit score is 520. So again.
Okay, so I'm a veteran. I'm close to retirement age. I haven't used my VA loan benefits yet. I might just want to think about leveraging my VA loan benefits, buying a multifamily unit in some military town where military guys and gals are renting all the time, right? Go live in it.
Well,
landlord, correct me if I'm wrong.
So if I was to look at you specifically, Keith, that would be a hard sell for underwriting because you own a home.
Okay, but let's pretend I don't.
If you don't, yeah, perfect.
Yeah.
The hard sell when people play that game, and I help people, but I also coach them to say, look, we need to make sure it makes sense. If you have a 3,000 square foot beautiful home in Epping, New Hampshire, and then you say, hey, I want to buy an owner occupied 4-unit outside of Pease Air Force Base, underwriters going to be like, why would they move out of their beautiful 3,000 square foot home in Epping to live in a 4-unit owner occupied? Doesn't make sense.
Right.
But if you were a veteran and you're renting and you said, look, I can't find a house, but I found this beautiful 3-unit. I want to live in it. Absolutely. Makes sense. Absolutely makes sense. And then really, then you could refinance that conventional and refresh or renew your VA certificate of eligibility to use
wow, okay.
You can use a lot of people don't know. You can use a VA certificate of eligibility. You can do it 10 times. Doesn't matter. You only have so much guarantee. So as long as you don't have a VA home loan, it renews your guarantee. It replenishes it. And now you're back to square one.
So Kevin, I'm going to bring up another slide. You haven't seen it yet, but we're running on 40 minutes. So,
Sure.
we've got the ear of somebody. They want some more information. Maybe they're thinking this is a direction they can go. Let's talk about the qualifications. Talk about service eligibility first.
Sure. So if you serve 90 days on active duty, you become eligible for the VA home loan.
Wow.
Okay. 91 days. It can be less if it was this really doesn't happen anymore because of basic training, initial basic training in AIT, advanced individual training does not count for active duty. So if you are in the National Guard and you go to basic training and then AIT, and you have 91 days of active duty, because you're National Guard, you need to do 6 years of 1 week in a month, 2 weeks a year. You need to have 6 good service years, which is all your guards people that are watching right now, you'll understand this. I was guard. You need to have 48 points per year, retirement points per year, which means you basically missed maybe 1 drill, 2 drills at the top. So if you have 6 years, you will be eligible. And that requires, because there's no DD 214, since you're still in the Army, you're in the National Guard, it requires a commander, a letter from a commander. So if anybody's out there that needs that, I can help them author that. It's really simple. Commanders may not understand how to do that, but we have templates where, hey, give this to your commander or your readiness NCO, they'll type it off. As far as active duty, if you have 90 days, you're good. In the unlikely event that you went to basic training, you graduated basic, and then you got shipped off to Afghanistan, like possibly happened over the last 20 years or, whatever it was, and got wounded and shipped home, you still may be eligible for a certificate of eligibility without the 90 days because it's a service-connected disability.
Got it. Kevin, talk about credit score.
Yep. And the last thing about that is I just did a loan for a surviving spouse. So a surviving spouse is eligible provided they have not been remarried.
Okay.
So as long as they don't remarry, if they're a surviving spouse of a veteran that's qualified, they inherit in essence that eligibility. But as soon as they get married, it
goes away. Okay.
So credit score. So credit score, we'll go as low as 520. So the credit score is, everyone uses automated underwriting. Almost the industry standard is automated underwriting. There's algorithms. There's Fannie Mae and Freddie Mac have both their underwriting engines. And when we put in a VA home loan, it runs these algorithms and it pulls on the credit score. The more important thing on the VA home loan is they don't actually use a debt to income ratio. We can calculate them, but it's an irrelevant number. The VA uses what's called a residual income calculation. So what that means is, depending on how many people are in the household and how big the house is, you have to have so much money out of your gross pay left over, and it's good. It'll work. So now converting that to a debt to income, I've gotten people VA approved at 59% debt to income ratio.
Wow.
That would never happen with a conventional. Even FHA taps out at 50. So I'm not saying it's wise to have a debt to income ratio of 58%, 59%, but it can happen.
It can get
and
done.
So my argument to real estate agents out there, or my counter to them saying that it's a less than stellar loan program, is it's more than stellar. It actually has more flexibility in the event something changes. If I get someone on the line on a conventional loan and something changes, it may make the deal go away. On the VA, I feel like I have more room to weather any changes last minute.
Right. So talk about you touched on. Were you touching on sufficient income right there?
So income on a VA home loan, it's income on any loan. The underwriter's job is to make sure that it's just what you said, which is stable, sufficient, and it's likely to continue. So just if you get child support, for example, if you are receiving child support, it has to, here's an example of likely to continue. It has to be 3 years or more. So if you have a 17-year-old child, you're getting child support, and the court order says it ends at 18. No underwriter is really going to allow me to use that income because it's not likely to continue. But, and the other thing about, the nice thing about the VA is disability income is tax-free. So if you are receiving a disability payment from the VA, I can actually plus that up by 25% and use that number as the qualifying income. Not for the residual income calculation, but for the qualifying income. So you have to be careful on that. But so if you're receiving $2,000 a month, Keith, tax-free, that would be like me having to earn $2,800.
Right. So you're touching on something that actually I hadn't even really thought about. So think about that mom who was forward, who served.
Yep.
She has a disability rating above 10.
Yep.
Because of her service, because of her disability, there's a strong possibility she's no longer married. And she has children. And she's wondering what the hell is she going to do to get into the real estate space. This vehicle actually is something she really needs to consider and talk to you about.
Absolutely.
Because I think if you're a service-connected disabled woman veteran with children and you no longer have a spouse and you did not remarry, this could be the vehicle for you to get into real estate.
Yeah, absolutely. Absolutely. And again, with the massive inflation or inflated purchase prices that we're seeing today, I can't believe what my house is worth, because there's no way I would ever buy my house for what it's worth today. When purchase prices go up, down payments go up in concert, correct?
Right.
But zero never changes.
Right.
5% changes when the purchase price goes up. Zero never changes. And that's why I argue that is one of the best, if not the best, loan program. And the fact that they are more lenient on credit, and the fact that you can stretch debt to income ratios because they use a wholly different residual income calculation, and the fact that the VA will work with the veteran to make sure if the veteran wants that home, it has to be absolutely beyond repair. And even then, I would flip it into a renovation loan.
Okay.
But the VA has, the VA is there to guarantee the loan, and their job is to protect us veterans, right? Making money is not their job, right? They're there to guarantee the loan. They want to help veterans. When you are in the conventional space, Keith, these lenders, these investors are looking to make money, right? So there's risk, and they want to limit their risk and make money. Now they also make money on VA home loans. Don't get me wrong. I'm just saying that the VA does a great job being an ombudsman for the veteran and being an advocate for the veteran. The lender only follows the guidelines that the VA puts out, but the VA puts out guidelines that I can go and have the veteran and I can get on a conference call with the VA and say, hey, listen, this condo is not VA approved, but he really wants it, but she really wants it. And the VA will make an exception. We've done it before. You can't do that on a conventional loan. Nobody cares. If it's not approved condo complex, it's not approved. So that's why I argue it's one of the best ones out there.
All right. We're coming up on almost an hour. I'm going to pull this off. Was there anything else that you wanted to talk about? One of the things I wanted to chit chat with you about real quick, unless you have something specific on this program, was you've done a couple refis in the last couple of weeks.
Yeah, they have a yes. So we had a nice dip in the interest rates. It was a short 3-day window where rates dropped over 0.5%, and then they shot right back up. And I called a couple of my VA clients and said, we need to pull the trigger. And I locked them in. The VA it's called the VA EARL. It's kind of a long word, but it's a VA interest rate reduction refinance loan. It's VAIRRRL. It's the VA EARL. That's what everyone kind of
got it. Okay.
It's a streamlined refinance. You don't even have to qualify for the loan. Like I don't even need it because the as long as there's a net tangible benefit, if you're paying a loan at 7% and you haven't been late, why would you not be able to pay it at 6?
Right.
If you're not taking cash out, if you take cash out, you're inflating your loan amount. You have to requalify. But if
Right.
you are simply reducing the interest rate, it's a streamlined refi because the argument is, look, he or she paid their loan flawlessly at 7%. They can get 6%. What's the problem? Let's just rewrite this thing.
So let me
Refi.
ask you, so what might be on the higher side, what might we see for interest rates for homes that were purchased by veterans with the VA home loan program? Is that 7 and change?
Yeah. Yeah. The peak was probably around in the mid 7s.
So then if a veteran has a loan at that interest rate, either conventional or with the VA loan program, one of the things I think they can do with you is kind of get pre-qualified, for lack of a better way of explaining it. So when it gets down to 6.5, even if for a day or two, you have the ability to help them out, correct?
Correct. I did a post about this recently. So I know a lot of people day trade, but so this is my logic, and I try to instill upon the people on my Facebook feed. If you're going to buy a stock, I don't care, just pick a stock, Microsoft, and you can put in an order to buy stock. You can put in a price that you want it to execute at. You can buy it at market, but you can say, you know what, if this thing dips to X amount, I want to buy it. You can set that so it happens automatically, right? I think a lot of people know this. You know this. You can just set a strike price. Well, that's for option, but you can set a price where it executes the price. My argument is, let's do that for your mortgage. Let's get with someone like me or get with your lender. Get your loan ready. Get your loan built. And then as soon as it hits a rate that you want to take advantage of, you don't have to call the client and get voicemail and say, hey, please call me back. And then they call you back 3 days later and they say, yeah, let's lock it. And like, unfortunately, it's already gone back up.
Right.
And so if I can kind of get them set up and say, hey, if with your permission, if you want me to capture this rate when it hits 6.25, I'm going to do it. Yes, absolutely. Because I'm going on vacation and I'm not going to be available over phone. That's what I would encourage people to do. Don't wait until you hear everybody at your coffee pot at the office saying, I just refinanced. Get your loan built. We all do it. We can have it ready. And then when that rate hits, you can actually have them execute that and lock it in. And then you can worry about the paperwork after, if you need any.
That sounds good. So call to action, Kevin. So we talked about a lot of good stuff here today. What's the best way to get in touch with you, and what kind of information do you usually ask for when people reach out?
So if you want to instant a VA home loan, a simple email or call. My phone number's on there, but it's I'll just say it, 207-956-3919. That's 207-956-3919. But really, talking about VA, I love talking to other veterans. I love helping veterans. But really, it's figuring out first if you even qualify for the VA home loan. And then, Keith, I'll end it with this. The only downside that I see is the funding fee you finance in. You are upside down the day you close the loan. But of the past, I bet 10 VA home loans that I've done, 9 of them have had a disability rating of 10% or higher.
Really? Okay.
Yeah, I'm a GWAT veteran, global war and terrorism veteran. I was in from 1991 until 2012. I did 3 tours just to let everyone know. So I have been overseas. A lot of the people that I work with are my peers, have also been to Iraq and or Afghanistan. A lot of us have disability ratings. And I guess one of the benefits, if you even want to say this, which may come across wrong, but one of the benefits of a 20-year war and a 14 or 15-year war is there's a lot of disability ratings. And there wasn't many in the 80s because you had Grenada, Panama, and a few skirmishes, but not 20-year-long wars. And so my argument is now even more than ever is the VA home loan. The VA home loan is arguably one of the best ones with the funding fee. If you have a disability rating of 10% or higher and that's waived, And by the way, if you have a Purple Heart, regardless of any disability rating, it's 100% waived anyways if you have a Purple Heart, which means you've been wounded in combat, which may or may not create a disability rating. You may have gotten nicked and you get a Purple Heart. But my point is, if it's awesome with the VA funding fee, it's just awesomer when it's waived. I know it's improper English, but I just argue that it blows away everybody else. And I wish people would understand that. I guess I wish sellers and listing agents would understand that the VA home loan is awesome.
I agree. Well, Kevin, thanks for sharing with me and anyone watching us tonight all you know about the VA loan program and some of the things that are happening in real estate and some clever and creative ways to think about leveraging the resources that you have towards building wealth. That's a very important thing. And that might be the next conversation we have, because I know you've got some really clever ideas on that.
Absolutely. And just to let you know, thank you for your service, because I know you served. And
thank you.
It takes us veterans helping other veterans to make us strong. And so I encourage any veteran that wants to chat. I love talking to other veterans. I love helping us out. And yeah, there you go.
All right, Kevin, that's it. We'll talk to you later. And thank you all for listening. And feel free to reach out if we can be of any assistance on this particular topic. Thank you again. Have a great night, everybody. Bye-bye.
Good night.